Alli, we were just discussing with Scott this idea that there's this massive dispersion that we're seeing when you kind of pull back the indexes and look at what's under the hood. He was mentioning that the average S&P 500 constituent is down 11% from its 52-week high. Given what we've seen with the Santa Claus rally, which really looks at indexes broadly, do you think that this is the time to actually buy the broader indexes, or is it more of a time for stock selection?
It's a great question. I think it's really hard to buy a lot of indices right now, both in terms of where we are, in terms of historical valuation, and in terms of what we're expecting next year and being very late cycle. So I think part of the Santa Claus rally is you have the balloon has burst a little in terms of concern about Omicron creating lockdowns and curtailing the economic recovery. And so markets have sort of gone up because we have gotten a lot of the sellers, the excess selling out of the market in the last 5 to 6 weeks. We've had about $350 billion in excess sales. So I think there's sort of this slow bleed higher, but I don't think you're going to have any real leadership, which is what you just talked about, until we get into earnings next year and we actually start to see what's working. So we're doing a lot of thematic investing. UBS has come up with, I think, a pretty clever mnemonic called the ABCs of technology, A being AI, B being big data, and C being cybersecurity. That is an area where I think exactly what you said in terms of stock selection, in terms of both the secular economy and where we're going, there's going to be some interest there. And I still like small caps because I think that we have a recovery that feels like it's long in the tooth. But when you look at the numbers for retail sales that we just got, I think there's more to go.
Why haven't they, Alli, gotten more of a bid, speaking of the small caps? We spent all this time talking about the S&P 500 at these record highs. Carl was referencing maybe some overbought areas of the market like mega caps. Bespoke had an interesting bit of data out this morning over the last 5 days. The money's been going into the mega caps. If you look at the Russell 2000, though, we're still talking about 8% or so away from record highs. So if it's so attractive, why isn't it moving?
Yeah, it's a great question. I think there's generally a lot of fear there. There are less people comfortable playing. And unlike mega caps, which are super comfortable for both individual and institutional investors because they're so well covered and they're so similar, both in terms of growth trajectory and market cap, all small caps are not created the same. So when you look at a small cap index, you have companies that are growth companies that may never make it and, are cash flow negative. And you have growth companies where they're actually been paying dividends. They've been, small cap contributors for a very long time. And so I think when you talk about stock selection as opposed to buying the indices, that is a place that we see a lot of value. But again, it's not going to be because we are buying the whole haystack, right? We are going to buy those few needles in there and use managers to do that.